Welcome to the Trading Rooms podcast. As always, I'm your host, Raghu Kumar from Rain Platforms. This podcast is sponsored and brought to you by Trading Rooms, India's first automated social investing product. Trading Rooms is the future of trading. The elevator pitch goes something like this. DIY trading is very difficult for most of us. Most of us have jobs and other commitments which really prevent us from participating with the stock markets in an engaged manner. Trading Rooms solves this pain point. With Trading Rooms, you can discover and subscribe to expert traders and investors by subscribing to their rooms. Some rooms are free and many are not. Some are trading only equities and others are trading derivatives. Some are doing discretionary trading and others are doing algorithmic trading. We're also launching cryptocurrencies very soon. So we are basically introducing automated trading to the masses because when you subscribe to a room on Trading Rooms, the trades are automatically taken on your MAP brokerage account, and we're integrated with more than a dozen brokers in India. You also have the option of taking the trades in a one-click execution manner. To learn more about Trading Rooms, check out www.tradingrooms.in. Now, let me introduce you to our guest for today. Today, I interview Vishal Mehta from MarketScanner.in. Vishal has covered a lot of different roles in the financial industry's landscape, including stints at Thomson Reuters, Bloomberg, and 63 Moons, among others. His focus at all these organizations has mainly been on charting and technical analysis tools. Vishal is also the co-chair of CMT India. Vishal has been instrumental in increasing awareness about technical analysis across South Asia. He has trained central banks in India, Nepal, Sri Lanka, Maldives, as well as at buy-side, banks, and corporations. He is mainly a systems trader and focuses on mean reversion trading systems with money management. Today, I'll try to pick Vishal's brain and get to know a little bit more about technical analysis and how one can successfully implement TA tools to improve their trading in a quantifiable manner. So Vishal, welcome to the podcast.
Hey, thanks a lot, Raghu, and always a pleasure to speaking to you.
So this is obviously our second, interview. We did one, I think, just about a year ago at this time, and we'll include a link to that in the description. But again, let's just kind of start with your general background to trading. How did you get introduced to trading, and how did you kind of get fascinated by technical analysis?
Thanks, Raghu. So yeah, it's a long story, but I'm trying to keep it short. Like being from the trading background, like my father used to be a broker for Bombay Stock Exchange. So trading was not new to me. I've seen him going to the pit trading, shouting and everything. And when I was young, I kind of used to figure out like why these guys are shouting, okay, for what the hell. Never thought about my career being made into the trading and the technical world. But eventually after I graduated with BSc Statistics, my first exposure to the market was technical analysis. My dad told me, go and attend a workshop on technical analysis. And I could not understand. I didn't even knew what is buying and selling. But what I could relate to is there was a chart. If the prices were about 200-day moving average, it goes up. If the prices were below 200-day moving average, you sell. That's it. And then I got hooked onto it. I'm more of a visual person than a quantitative or a number person. And the visual things really clicked on me. And then I started my career in technical analysis, joined various companies. I had, we had a rough patch where I had to go through quite a few jobs and try to, build on top of that. And slowly and steadily, I started picking up that. Been to Spider Software, Reliable Software, 63 Moon, Thomson Reuters, and moved my career from a retail to the institutional. But that's about gaining the knowledge. On the trading front, I started trading whatever the little money I could save from my pocket money and the earnings. I used to put it up, make money, lose money, make money, lose money. The story continued for a while. So yeah, that's a small snippets about my long journey.
No, so you've had an amazing journey. So let's talk about, you referenced, working at Spider, and I mentioned Thomson Reuters and Bloomberg, right? How do you think your experience at these places kind of shaped, who you are today?
It as I was just putting out a tweet today, you are what you are surround yourself with, right? When I was with Reliable Software and Spider Software, day in, day day out, I would meet 2 or 3 traders. And they were completely different orbit traders. One would be completely trend following using moving averages and MACD. And then all of a sudden you get to meet in the evening a guy who is talking about mean reversion. Somebody is talking about volatility breakout. So daily, for me, it was a routine of switching my hats between a trend follower to a mean reversion to a volatility breakout to whatnot. That actually, gave me an exposure that all things work if you follow it consistently. So that was more of a retail mindset where, they were more interested into the entries and the exits. And nothing wrong in that, by the way, because that's where you will going to make money from. But when I moved to Thomson Reuters and Bloomberg, and usually they are institutional players, and usually the technical analysis is a word that they don't want to use it. They try to kind of flamboyantly put it around. It's a quantitative way of analyzing the market, but it's nothing but the price and the volume, right? And I go to many fund managers who are hardcore fundamentalists, but on the right side of the corner of their Bloomberg or a Reuters screen, there will be a chart with a 50 and a 200-day moving average always embedded into it. Now you should ask them question like, you are a hardcore fundamentalist. You don't believe technical analysis to work. Why do you keep a chart over there? And say, okay, we also don't remember what's the history, and history teaches too much. So somewhere, you like it or not, they are also looking at the chart. They are also looking at a 200-day moving average. They are also looking at the very famous 50 and 100-day moving averages. And their perceptions are also changing about the value of the company depending on the price. And that was the surprise element to me. And we have seen n number of times, the prices usually determine the perception about the company. And that's where it all started. And they talked about the psychology and the money management. And that was the two missing link that I had as a trader, because the retail traders are very glued to the entry and exit, which again, I'm repeating, it's very important. Otherwise, you will not make money. But after having a simple entry and exit, the money management and psychology, which will put you toward, orbit of profitable trader. So one of my friend who runs a brokerage house told me that 90% of the trader loses 90% of their wealth in the first 90 days. Okay. And that's a very interesting, connotation, because we always thought making money is easy, which is not. But this stint at Spider Software, Reliable Software, Thomson Reuters and Bloomberg gave me a holistic approach to our trading.
Got it. So a couple questions kind of come to mind, based on your answer. Let's start with, this kind of dogma that sometimes surrounds technical analysis, right? Like you mentioned the fact that, you were at these institutions and I've seen it too, right? Like in fact, when I came to India, we actually initially were working out of, MF Global India's office, right?
Yeah.
And I would spend a lot of time there, and I would notice this. Everyone had charts open on every screen. They would have Bloomberg, Reuters, and there would always be a chart, right?
Yeah.
But then, like you said, when you started having these conversations about technical analysis, there's always this kind of dogma associated with technical analysis. Where do you think that comes from? Because on paper, it doesn't make sense. Like you said, everyone references charts, everyone references prices, and yet there's always this weird association that these things don't work, right? Yeah. Like, why is that?
Let me just take one step back and,
sure.
Tell you why the name of the technical analysis has been spoiled to a level where people don't want to get associated with technical analysis. And I think a lot of blame has to come to the people who have branded or were the frontiers of this art. What do I mean by that? Means, we started out, let me put it we, because I'm talking about as a community right now. We thought technical analysis is nothing but buy here, stop loss this and target this. That's it. But when I did my CMT, Chartered Market Technician, and I realized that technical analysis is not only buy this, stop loss this, target this, okay, it's so much more to it. Even there is so many fundamental factors that goes into technical analysis that you can't even believe. Like intermarket analysis, how the cyclical movement or you talk about lot of volatilities, you talked about lot of cyclicality, you talk about intermarket analysis. There is so much. Like I remember in Fidelity, there is a chart room. Okay. They have a big chartist room. So why this dogma came in terms of fund managers started thinking that if I'm buying and selling on a large corpus, a huge quantity, and I cannot go to my investors and tell them that I bought this stock because there was a major support.
Oh, okay.
Everybody has to tell about a story, right? They have to give a justification and rationalization of the EPS is growing, the momentum is there, there is a growth, there is a SWOT analysis and all that stuff. But in the bottom heart of that, when they do execution, they are building a support in the market, and that's where they are getting it. So yeah, it's going to take time. I'm not saying going to be an easy ride for any technical analysis to justify on a large corpus.
Sure. Yeah. And I think another reason might also be because I think there's always this assumption that a good investor or a good trader is expected to predict the future, right? Versus react, right? In the sense that, right, like generally speaking, if you ask the layman and you ask them, okay, what are the markets all about? They're going to say, oh yeah, it's about predicting the future, right? But actually, like you said, there's an association with patterns repeating themselves and everything being a reaction to something, right?
Yeah, which is very correct. And I always have this fight, okay, between technical analysis and fundamental analysis. And they say, no offense against fundamental, I have a high respect, because I believe, and this is my fundamental belief, that if you go for a sea sailing, right, you go into a boat, there are two major factors that goes into the sea sailing. One is the wind, and second is the underlying water current. So if you see the underlying water current and the sea, both are in the same direction, your sailing would be very easy. But imagine your water current is in one direction and the wind is in another direction, it's going to be difficult. So you can have fundamentals and technicals combined together to have a better judgment rather than just sticking to one way of the world and saying that this is the right way of the world and this is how it should work. It doesn't work. In my opinion, I can be wrong. Secondly, always there is a fight, like, all technical patterns, right? You talked about that. And, there was a situation where somebody told me, or I read, not somebody, we can cut that part. I think so I read it somewhere where they say that, technical analysis is nothing but you are looking at your rear view and predicting what will happen into the future. And that's very funny because, we are looking at the past and trying to see what is going to happen in the future. And then I turn around and ask the same question, that you analyze the company balance sheets. You analyze the economic indicators. There are all the past data, maybe not
exactly.
as today or yesterday. They are
right.
as late as like last quarter. And you are predicting in the future. So nowhere we are different, we are same. It's just that how we put it across matters.
Sure. Yeah. And ultimately, you cannot make the argument that you're only going to trade on information that has not been priced in, because if that's the case, then why are you looking at balance sheets, right? Like you said. So yeah, I find that fascinating. So I also wanted to kind of ask you straight up, Vishal. So since you are operating a fund or you're associated with the fund, how do you go about making the decisions? Do you kind of lean more on technical or fundamental or both? Like, how does that work for you?
So we started out as a technical because for us, the price information I'm sure you would have heard this term many times, is Bhav Bhagwan che. Okay, price is the king. Price is the god, not even king, is the god. Okay,
it's God, yeah.
So for us, we are managing everything on the price-based information, be it technical. So we are also using a lot of options for our fund. We are talking about the fundamental philosophy of tradings, like theta decay is real, like it or not. Okay, that's the hard truth. There is delta moves, that is real. So we keep on building strategies on those lines. As of now, we do not take fundamental into consideration. But yes, for my personal investment, because I can do a swing trading where I can buy and sell in like 10 to 15 days. That's where I use a concept of called as canceling, which is propounded by a very legendary trader called as William O'Neill. And it's a brilliant concept of combining fundamentals and technical together to come out with a good style. But for the fun, it is predominantly price and the option underlying principles.
Got it. Let's talk a little bit more about technical analysis. Sure. You've obviously been around technical analysis for a long time. What are generally the biggest misconceptions people have on technical analysis?
Say there are one divergent view about technical analysis. I'll tell you. One, technical analysis doesn't work, and my answer is yes, it does work. And there is another divergent view that technical analysis is only work, nothing else work. And my answer to that, it is a probability game, and it is always like you need to play with your probability and risk management. So the general misconception, just to elaborate on these two divergent points is, you need to figure out what works for you. Okay. When you go to technical analysis, they think RSI is the best or a 200-day moving average is the best. No. Like I keep on giving this example. If you are a world famous gardener, okay, you're best in the gardening field. And if I give you a hammer as a tool, what would you do with that, right? Nothing. Similarly, you're a world-class carpenter, and if you get something like a gardening tool, what would you do with it? So over a period of time, as a trader, you have to figure out what is the right tool and stick to it. So, just to clear out all this misconception, technical analysis do work, but it does not work all the time. It is based on the probability, like anything else in the world.
Sure. So you mentioned early on today, right, that you were a visual person growing up, I guess, right? And I guess you still are.
Yeah.
So my question has to do with what are some general cues that a person can pick up on, right? So for example, our listeners out there who are curious about technical analysis, can you nudge them in a certain way, based on certain behaviors or patterns that they have, right? In terms of being more visual or things like that. Like me personally, right? I'm actually not very visual, so, which is probably why, I'm guessing I've never really been around charts or been, fascinated by charts, right? I've always been more of an analytical guy. So I just went into systems trading very early on, and I never look at charts, right? But then I know other people who are very visual. So is that a good idea, like based on your personality and based on who you are, to kind of lean towards one direction?
So you brought out a very good point, Raghu. Like, today I am a hardcore system trader. Okay. But that hardcore system trading development actually came from a market observation. And the best way for me to develop a market observation, I keep on doing this day in, day out. Like I come to the market at the end of the day, not during the day. I find out the biggest gainers, biggest losers. Okay, take the top 5 gainers and take bottom 5 losers. And you keep on looking at them. And you start building some hypothesis around it. What do I mean by that? I'll give you a simple example. When I was looking at chart, okay, for the major gainers, and interestingly, there were certain patterns that kept on propping again and again and again and again was, if today's open is greater than yesterday's high, okay, and the first first 15-minute candle was a red candle, that means people were selling, assuming we will fade the gap. And if the high of that day is broken out, that turn out to be a big trend day.
Mm-hmm.
But many of the stocks that I have observed in the gainers. So simple strategy like, open greater than yesterday high, first candle is a red candle. That means people are trying to sell in the gap, trying to think that the gap is going to fade away. And everybody's keeping their stop losses just above the high of the day. And when the market starts going up, your stop losses are getting triggered, the bulls are getting in the picture. So this is how the market observation will keep on helping you to build your hypothesis for your systems or any trading strategy. So you find a lot of things, like Ken Slim, for that matter, was propounded in something called as neuro-linguistic programming. Means you go back in the chart and you figure out which were the winners of the multi-years, right? What were the multi-bagger stocks of those years, and try to figure out what were the characteristics of them, visually, quantitatively, and try to quantify them into a numbers. Like Sachin Tendulkar, when he hits the straight drive, it's the best straight drive in the world. But if you want to mimic it, you need to keep on repeating it, what he was doing. And then maybe you will not be Sachin Tendulkar, obviously, but at least you eliminate the bad habits.
Right.
While doing a straight drive. Sure.
Yeah. So let's talk about how should someone actually incorporate technical analysis? And this is a question that's also applied for me because, when I have actually dabbled in technical analysis, you can get really overwhelmed, right? Like you go to any sort of charting tool and there's like a million indicators and there's just so many ways of kind of thinking about the whole thing, right? So for someone who's never really used technical analysis, what are some basic ways for them to start incorporating technical analysis?
So Raghu, this question requires a little bit of, understanding, because this question question itself can be very vast. Forget about the answer. But I'll try my level best. When I read Market Wizard books, and I'm sure, you'll ask me about the books and everything, but there is a component in that, I really admired that you have to figure out what is comfortable for you. In terms of, like, you can't just take anybody's webinar or a course or listening to some YouTube videos and that becomes your style. First of all, there has to be some fundamental philosophy about the market or about yourself. I'll be very honest with you, and I gave this example many, many, many times. I'm of a kind of a guy that I've realized that I want to buy expensive stuff. Okay, even if I want to buy a camera, I go to Amazon and I never, do sorting from lowest to highest. I do sorting from highest to lowest. Right. And think why this guy is charging so much. What is the quality that he is having vis-a-vis the other guys? And try to differentiate, because the winners are clearly winners, right? And for a reason. So that's my fundamental philosophy. Not necessarily everyone has that. My wife is a great bargainer and she will find bargain in everything. So as a thing, you have to have a fundamental philosophy about life. Now you take that fundamental philosophy and put it into market observation. What do I mean by that? You go to the market and try to figure out what that fundamental philosophy I had. Like, I need to buy expensive stuff. How I can put it into the market? Like, I like to buy stocks which are at 52-week high, and forget about 52-week high. I like to buy the stocks which are making an all-time high. Like Adani, Wilmar, of those world, CDSL, BSC, when they were making all-time highs, I was always in them. So that's my fundamental philosophy into the market observation. Then you go about finding the indicators which complements your fundamental philosophy and market observation. Like if the market is an all-time high, there is no indicator that is going to work because it's an all-time high. Then what, as a trader, I need to do? I need to trail my stop losses. So then I figure out which are the indicators which can help me to trailing, like parabolic SAR or a super trend, something of that sort. If you're a mean reversion trader, you may want to look for RSI, MFI, those kind of indicator to play with. And once you do that, you have risk management, you have your indicator, then you start building your entries and exits.
Sure.
And that's how a technical analysis journey begins usually. But I did not follow through. So maybe somebody who is listening now can do that. But I followed the general way that everybody does it. Looked at the video. Oh, this looks so amazing. Let me try it. Failed, paid money, went to another YouTube video. Oh, this looks more interesting. Maybe I think that this is the holy grail. Jumped in, come out.
Sure. No, so, my next question has to do with how do you actually find that indicator, right? So let's say I figure out my tendencies and what I like to do and things like that. Based on that, where do I go right now? And you can also recommend any tools, right? In terms of where do I actually go to find the list of indicators, which is, in line with my, what I'm looking for.
So if you want to go to heaven, you have to die.
That's true.
So if you really want to find out, which indicator suits my personality or I am shooting with that personality, you have to actually use them.
Sure.
And the minute you start using it, you will over a period of time, and it's not going to be like a one-day job. Somebody gets it in 1 month, somebody gets it in 1 quarter, somebody gets in 1 year, somebody may get in 10 years. Bottom line, I'm trying to say, it may be a very philosophical answer, but the fact after being in the market for so long time, I can tell you this with conviction that, you have to try few indicators. So like, if I type in, Google is such a powerful place, like even TradingView, I just type in mean reversion indicators, best mean reversion indicators, I'll get 20.
Yeah.
But to select out of 20, I have to just put them onto chart, and somewhere the bell will start ringing. It's like, when you meet your better half, okay, you will hear the bells ringing in your head. Yeah, this is the one for me, right? Similarly, you put your indicators, like I put it indicator when Larry Connors introduced me to a concept called as 2-period RSI. The bell just like boo. I was looking to find out bottoms and the tops, and this 2-period RSI worked like a charm. I used 14-period RSI, did not work for me, but then you keep on finding in that indicator again and again, what are the modifications, and that's how you will learn which indicator suits me.
Sure. And I'm sure there's also an element of you need to believe in the core concepts of the indicator, right? Yes. And it needs to be aligned with your lifestyles. If you're, in terms of how often it's pushing out any sort of a signal or things like that, that needs to be also in line with what you're looking for in terms of the frequency of trades, right?
No, I think that, Raghu, you really nailed that one right, because you cannot, if you're a frequent trader, okay, you want to be in and out quite often, you can't be using a 200-day moving average. Come on.
Exactly.
So that's, you nailed it right. You nailed it right. Yeah.
Right. So, maybe at this time we can also talk about Market Scanner, right? Obviously you're the founder of Market Scanner. Can you tell me a little bit about Market Scanner and also what you guys are trying to solve? Yeah.
So what we are trying to solve, I'll be very honest, we still don't know what we are trying to solve. But what we intended to and what we started out as a trader, when I was trying to search for very genuine content, okay, which can be quantifiable, or maybe someone whom I trusted. If he could have put it all his experience of these 20 years, because I started my career at 2002, now we are at 22. Wow. It's 20 long years, and I have done virtually everything in the world, doing all the webinars, to all the softwares, to all the traveling conventions and everything. Okay. And using all the softwares again here. If somebody would have concise and told me, okay, Vishal, if you want to start your journey, these are the few things you may want to start with. Okay. These are the few, these are the blogs that you want to read. These are the books that you want to read. These are the books. And I kept on getting that question again and again and again and again on Twitter and, LinkedIn and other social media platforms. Okay, where should I start? I said, okay, why don't I put my thought process into Market Scanner? The idea started with that. So we put it out blogs. Then eventually we started we realized that there was so much mis-selling happening in the market about strategies and everything. So it's okay, hold on. Okay, we have told them what is good, but also we need to give them something very practical. So we started building our strategies and giving out those recommendations. We started giving out the strategies. Obviously, the idea was not to give them the strategy to make a money-making machine, but to give them the thought process of building a strategy. Right. So even during my presentation that I teach, like in 1 hour presentation, about 30-35 minutes goes into the hypothesis building of the strategy, and only 15 minutes on the rules, because that's more important to them. And now eventually we are going to come out with something very fantastic. Eventually we'll roll out, I think so, in June, where we are going to take something very interesting in terms of how a discretionary trader and systematic trader can combine their hand together.
Wow.
So wait for that. So that's what happening on the market scanner, and scanning for opportunities. That's the tagline of market scanner. So we are going to scan for a lot of opportunities for the participants.
That's amazing. That sounds really exciting, especially the whole merging of discretionary and systems trading, because I think that's the future. If you were to ask me, I think that's kind of the golden, equation. Let's also talk about a topic that is very close to you, which is books, right? So you are a voracious reader, and I've read some of the blogs and also some of your tweets, where you've talked about this. Just wanted to kind of get a quick list of either books or authors that you would suggest for our listeners today.
Sure. I think so. If anybody says, okay, you can have only one book and only one book in your life that you can read on trading, would be Market Wizard by Jack Schwager. Obviously,
the original
one. Yeah. The original one was like, it just, put the, kind of groundwork for you to build a career of trading or even investing, because it's not about trading. It's all about your psychology and your system together. But then the entire series, I have a complete set of entire series starting one, authored by Jack Schwager by himself, luckily, about the unknown market wizard. So it is all about market wizard, new market wizard, stock market wizard, hedge fund wizard, and recently unknown market wizard. So that's the complete series that you want to and it will help you when, when you are in a drawdown. Whenever I'm in drawdown, and obviously everybody will be in a drawdown.
Sure.
I pick up any of the book and start reading about one of the traders. And interestingly, they also go through drawdowns, and then they bounce back. So they really give me that motivation to play around. So that's on the psychology.
Sure.
Second part, Mark Douglas, Trading in the Zone, Disciplined Trader. They are heavy books, but it completely tells you that nobody's out there to hunt your stop losses. Market does not know where your stop losses are. Like, there is a general philosophy that market just can't beat stop loss. Market doesn't care.
Yeah. It doesn't care. Exactly. Right.
Doesn't care. And third one I would recommend is reading about Larry Connors if you're into the mean reversion side. So I'm a big, kind of believer in the mean reversion. Obviously, trend following is also part of my characteristics. But mean reversion for short-term swing trading. So any books by Larry Connors, like Short-Term Strategies at Work, and quite a few of them.
Sure. And I wanted to kind of reference this amazing MoneyControl article, which was done on you, I think in 2019.
Yeah.
I was reading through it today. And basically in it, it talks about how mental discipline rather than technical analysis and strategies is the main challenge in becoming a successful trader. Vishal Mehta crossed that hurdle when he moved from discretionary to system trading. Just wanted to get your thoughts on that line in the article, and we will reference that article, because I thought it was a very powerful line, because he just mentioned, when you go through a drawdown, right, having the right mental fortitude to kind of know what to do, and then getting inspired by good traders in that case. How does that whole thing get associated with moving from discretionary trading to systems trading?
I think so. Thanks, Raghu, for asking this question. And I think so I really wanted to answer this question because when you do CMT and when you are a co-chair of India CMT, people will look up to you, thinking that, if you are a CMT or technical analyst or you have worked at so many places, you must be a successful technical analyst, which I am, but I'm a very bad discretionary trader. So I keep on telling this. You can be a good analyst. That does not mean you're a good trader.
Sure.
Yeah. So I was able to look at the chart visually, and I tell them this breakout will be a genuine one. This breakout may not work out well. Price, volume, action, and all that stuff. The minute I start putting money, all the analysis goes out of the window, and you wear a trading hat, and all the psychology downfall starts coming in. And it was a journey for me for good early part of my career. Because I never believed everything will work and all that stuff. So in terms of, I used to keep on jumping the system. I used to keep on jumping the system. Today I did RSI. All of a sudden somebody comes say Elliott wave works. I jump to Elliott wave. Somebody comes and say again works with the date and everything. And I jumped there and never followed one thing till the end. Okay. And somewhere that faith was missing. And the faith was missing because I could not get a large number of data sets to prove that this system works.
Mm-hmm.
Okay. And when I moved, okay, and I'll talk about mental discipline in a while, but I just want to talk about the journey, how I moved from discipline. And I'm again telling you, I have a very, very high regards for a discretionary trader, because I think the system trader is, I'm not saying it is easy, but relatively easy than discretionary trading. So I have a very high regards because I've been there and I've not been successful in that. So I kind of have a high regards for discretionary trader. But what I realized when I moved to I read a book called by Larry Connors earlier, and then he talked about edge. Okay.
Mm-hmm.
That concept was something new to me because he was talking about 0.03% or 0.50% edge or maybe 0.45%. And I was like, dude, this guy is like managing millions of dollars and he's talking about 0.45, 0.3%. What is he talking about, right?
Right.
And then it just dawned on me that we are, like it or not, for a lack of a better comparison, in a casino world. Okay.
Yeah.
The people who are coming or giving money, right? They are trading with each other. Either you be the casino owner or you are the casino goer or gambler.
Gambler, right.
So, a casino owner will always think in edge. And casino, the people who are here for fun will always think about big bets, putting big M2M and everything.
Yeah.
And in that journey, I kept on building my strategies on that small edge and kept on doing it again and again to compound my money. But still, there was one element. I was still not comfortable with, system. But then I started looking at the large number of data, and the turnaround came after, I think so, around 2020 or around 2019 only. But just after that, I attended a workshop by a guy called Madan Kumar. And it just completely changed me as a person. What happened was, he was running some experiment where he was trying to get a small corpus to a large corpus. And when I went through his blog and everything, he started showing that his daily PNL, and it was completely red. Every day he would lose money. Maybe one day he'll make money. And I was like, dude, this is not how you're going to make money. But then he clicked on the next slide. All of a sudden, the daily turned into a weekly. So the number of points that he made was on a weekly point. But still, there were many rates and only few week, but comparatively lesser red than a daily. Then he clicked again.
Oh, okay.
That weekly turned into monthly. The number of reds started reducing. Then he clicked on quarterly. And only 1 or 2 quarters. And then he clicked and I said yearly. And there was not a losing year. And that just completely blew me away. And that was my turning around. And I thanked Madan Kumar and even in this platform, I want to thank him for that, because usually this kind of big vision, we don't get it because we get so hooked on to the day-to-day M2M profits.
Right.
That you forget the big picture.
Right.
And that's what he called as the law of large numbers. So you start believing, and I started believing in law of large numbers. And that was the journey that completely transformed me from a completely discretionary trader to a completely system-based trader.
That's an amazing story. And that just shows the power of, money management, right? Money management and risk management, position sizing, all those things. I think it's a beautiful concept. And maybe also for you, because you're such a visual person, when you saw that visually, you're probably just blown away, right?
It was a turnaround for me.
Right. So my last question on this whole topic here, Vishal, is how does one actually make that jump? And this is a common question I ask on this podcast, because I am, as you know, biased towards systems trading. Although I have the utmost respect for discretionary traders. And also one thing I wanted to mention really quickly was, you mentioned the fact that, when you're a trainer, sometimes it's hard to put on that trader hat, right? When you put on the trader hat, then you start thinking differently. And I think that's totally fine, because in that same MoneyControl article, you also had a really nice quote where you compared it to coaching, right? Where, you don't have to be a great basketball player in order to coach a basketball team, right? And I can totally relate to that. But coming back to the whole systems trading thing, how does a discretionary trader who maybe has some sort of appreciation for technical analysis, how do they actually start incorporating a more systematic way of thinking about their trading? Because I'm sure a lot of our listeners are looking at charts. Maybe they are visual people, and they may have they may want to actually incorporate some of the systematic trading principles.
So it's a journey again. It's not going to be an easy task. There are certain things that you need to first figure out at your end. Like, I always keep on do it yourself or get the experts. Okay. In terms of like, if you want to jump in, first of all, have certain rules, or maybe I'm not bragging about me, but there are good traders, but like me, Kiruba Karan, Madan Kumar, there are good, bunch of Vivek Gadodia, there are good bunch of systematic traders. Do read through their blogs, do attend their conferences or blog, stories. And we have put out many. Okay. Just get that thought process. We are not here to talk about strategies. Okay. Get the thought process. Try to get some logic. And I'm sure even the discretionary trader, when he says I'm a discretionary trader, does not mean they don't have a rule. They do have rules. Otherwise, I would get in and get out. Right. So just write those rules down and give it or do it. That's a big question I always keep on getting. Vishal, I don't want to pay a programmer. Okay. I would want to learn my Python, and I want to learn, and completely okay with it. But what I realized, I tried learning Python. I tried learning C++ by myself and failed miserably. Not one time, not two times, not three times, not four times, 5 times. And I said, no, that's not for me. Hired good people. Because even if you forget one comma, your code doesn't run. Like, dude, I'm not going to spend much of time doing all that. Let that other guy handle it. Get your ideas back tested. Because if that idea has worked in the past, there is a higher probability that it will happen in the future. Right?
Right.
And once you have an backtesting result, forward it, test it for a while. Okay, just do a paper trading if possible. And if your forward test shows you the results that are shown in the backtest, compare it. Then you start with live, with one lot or 1 shares or 100 shares. Don't put so less that you don't care about it. Don't put so high number of shares that you stop believing that it works even once you have a loss. So that you have to have that number, and that you have to define it for yourself. Where you are worried about your losses, but it should also matter to you.
Sure.
So once that is complete journey that you can kind of help it. And I think so, eventually when, and I think so TradingRooms is going to launch it. There are a lot of traders who is going to talk about their system tradings. They are going to talk about their recommendations, their view about the market, and maybe you start picking up from there onwards.
Sure. No, I think there's so much to take away from that, right? Because, even something like back testing in itself is such a vast concept. You could have probably an entire episode just dedicated to back testing and forward testing and live testing, and all those different steps are probably all equally important. But I think what's important is to think, at least acknowledge the idea that you can systemize or systematically trade your strategies, right? And like you said, every discretionary trader does have a rule. It's just that they probably haven't thought about what that rule is and actually written it down, right? So it requires that effort to actually write down what that rule is. So I totally agree with everything you said there. Obviously, Vishal, we have a lot of listeners today who are relatively new to trading and investing, right? What general advice can you give to an aspiring trader, especially one who may be looking to incorporate technical analysis?
Okay, so there are 2 things that I always keep on telling. One is basically a quote translated from Warren Buffett. If you're an investor, So Warren Buffett says, markets are nothing but transfer of wealth from an impatient investor to a patient investor.
Patient investor, right.
I just turned into trading world. The markets are nothing but a systematic transfer. The word is very clear. Systematic transfer of money from an undisciplined trader to a disciplined trader.
I like that.
So that's my motto, and that's what we kind of build on, trying to be on the discipline side as much as possible. And the second part, I would say, there was a trader called SPR Sundar, and I heard it saying, it would have come from somewhere else as well. So citation, obviously. So in trading, to be successful, you need to have an edge and you need to have an hedge. Okay, so these are the two important elements to be successful in the market. Edge is what you're going to help you to make money. Hedge will help you to sustain in the market, and discipline will help you to compound your edge.
I love that. And what I really like about that is that's a very actionable thing you can build upon, right? Anybody can build upon discipline. Cultivating an edge is obviously you have to have that. Otherwise you're not going to be profitable in the long run. And I think the hedge component is what a lot of people probably overlook, right? Because they assume things will always go a certain way. And then it's when things don't go correctly, that's when you need a hedge. So I love all of that. So, Vishal, thank you so much for the interview today. I think that was a really nice interview. I've always been very biased towards systems trading, and these types of interviews it's like a breath of fresh air, right? Because I think I appreciate the fact that you started the interview talking about how there aren't really that many differences between fundamental analysis and technical analysis. Everything is a function of existing information. And like you said, a lot of fundamental traders actually keep the charts open in front of them, so it's not like, it's actually a different world. So, thank you for the interview today. My last question, Vishal, for you today is, this is what I ask every guest. Where do you see yourself in 5 to 10 years?
I wish I knew the answer to that. This was the question asked to me by, we asked Mr. Michael Bloomberg, okay? And I really want to take this seriously. Okay. What should be a target when I worked with Bloomberg? And we asked him when he was in India, what should be a target for the next year? And he said, are you, what is it, astrologer? You can predict the future accurately? No, I want you to sell me one terminal more than what we did last year, and that's growth for me. Okay, I just don't want to stagnate myself, but even if you sell one more terminal than what you sold last year, I'm happy because it's a growth. So for me, I don't have a 5-year or a 10-year vision. As I told you, I'm just a guy who is actually talking about work to be done now and take it from there onwards. So maybe whatever my AUM is right now, that's going to grow by 1 rupee. Even if I grow it by 1 rupee, it's a growth for me. And I keep on working on that, and let the other part will take care of itself.
I love that. And obviously, what you're doing is working really well for you. And I think you especially, you're doing a lot for that whole community in terms of the technical analysis community and the charting community. And obviously you are a very well reputed trainer, so, yeah, thank you so much, Vishal. Appreciate it.
Thanks a lot, Raghu, for taking a time out. And I think so it's pretty late night, but you asking me a lot of very interesting questions.
It's 12:30 in the morning, but this is actually pretty early for me, so it's okay.
Oh my God. Good.
All right, cheers.
Thanks a lot, Raghu. Really appreciate it, and best of luck for the trading rooms. And yes, we'll see you in that soon.
Absolutely.